In this video, guys, let's look at how we reduce trade anxiety with good habits. Stay tuned. Hey traders, warm welcome to you. Thank you so much for joining me. This video, I'm going to talk a little bit about trading habits that help reduce that anxiety. You know that feeling you get sometimes when you trade? Sometimes you're cool, you're calm, you're confident, you're like, hey, you know what, the trade's going to play out, whatever happens, happens. I feel good about the whole situation. Other times you feel a bit anxious. You're like, oh, I was going to hit my target. Oh, it's coming back, it's back and forth. And you get a little bit of anxiety and decision, kind of anxiety on whether you want to take the trade off, whether you're going to kind of break your rules, you're trying to stick to your plan. It's this constant internal battle. And if you're kind of watching the screen, that can be like a really long period of time, even though it might only be kind of a couple of hours. It feels like you're having this constant battle in your mind. So how do we reduce that? You know, we have rules and we have specific things that we do to avoid us getting into the situation in the first place where we have this. But what about habits? What about things, structure, ways that we can trade to just reduce the anxiety level in the middle of the trade? All right, so the first thing is to take trades with an obvious structure. So what I mean by this is, you know, when I talk about trades with structure, and I've shared loads of these guys on the channel before. Go back and kind of check some of the videos out with specific strategies and ideas and candlestick patterns. But a specific trade structure means that you have a very obvious place for a target or at least a stop. Preferably both. But let's say you've got at least got an obvious place for a stop. Why does that reduce trade anxiety? Because if you put an arbitrary stop in, so let me use an example if I can just fit it in probably about there. Okay, let's use an example here. Let's say you've got a long, for whatever reason, markets come down, you decide to kind of go long, let's use red on this, here, and you go, where do I want to put my stop? Well, it hasn't really flushed lower, it's kind of gone lower, but I'll give it a bit of room and I'll kind of go here, and you kind of, you have a little bit of a guess, you want to give it a bit of noise, allow it to flush a little bit lower, take out the low by a few ticks, not by too much. You're playing this game, and as a trader, it's kind of chugging along. You can get anxious. You're like, oh, is that stop too wide? Is it too narrow? Is it, was it the right position? Is it the right trade? You're questioning all these different decisions that you've made to take the trade, the direction on the trade, the stop on the trade, so all of this, and this is creating anxiety in your mind. However, when there's a trade with a very obvious structure, for example, let's say then the next candle, that's red, let's go black, next candle kind of comes in and we have a big kind of wick to the downside, or a big tail to the downside, big flush, big type of pin bar almost, if you like, and then you take the trade here, and this is a bit of a rough example, but you take the trade here long, and you expect it to come up here. All of a sudden, if that's on high volume and that's the characteristics of a flush that you like to look for, the trade is much more structured all of a sudden, because now it's an obvious place for the stop, because logically you're going long after the flush and you're expecting that to be the very last of the supply coming in. The demand's now going to come and take over and you're going to chug to highs. Well, that's the expectation, that's the thesis of the trade. And so it's an obvious place for a stop, because you're like, okay, well, if that is true, if this really is a flush and it's the last of the sellers just vomiting out the positions or just getting rid of the last positions, or the buyers backing off, whatever theory you come up with for the flush, it's come back, it's had the flush, it's come back, I'm taking it because of that. If it now revisits that, then the whole trade idea is invalidated, right? So it's very easy for you to put a stop under and say, okay, if it goes back below that flush low, well, that wasn't a flush. My whole thesis is based around the fact that that was a flush. So if the price goes below that, it's not a flush, I'm wrong, I've read it wrong. So it's a very, very simple structured way to take a trade. Whereas if we didn't have that candle and it was just at a low point you thought was a reversal, the stop becomes, well, if it does take it out, we haven't flushed yet, we haven't done this and that. So think about adding more structure to the trades, or taking trades with a very specific structure. The range break fake one that I talk about, and you guys have great results with, because you're on it, you know it, we're there, we kind of come back, we break out, fake out, and then we rally off. So we do some kind of dip to there's a few little parameters that go in with the filters and stuff, but that's the simplistic version of it. That's a very structured, easy way to take a trade, because hey, if that genuinely was a fake out, we shouldn't now revisit. Whereas if you're just trading at the bottom of the range, you say, oh, it could still fake out. So you're kind of looking for one extra layer. It's not to be confused with confirmation, but it's just something that allows you to structure the trade a little bit more obviously, reduces that anxiety slightly. Okay, number two, having a specific hold time. I really like this, And I'll often do this with a lot of my trades. So I'll take a trade and I'll say, right, okay, I am going to hold this for, if I'm day trading, attempting a trade off the open, 15 minutes, for example. This is a 15-minute trade. I'm going to hold it 15 minutes and then I'm going to close it. Or it's going to hit my final target, or it's going to hit my stop, or I might not have a final target. I'll say, hey, I'm expecting to hold this 15 minutes, push to the high side. We've done this, this, and this. I've taken the trade. I've got a good entry in it. The stop is there. The risk is managed. It's a 15-minute hold time. That reduces the anxiety in the trade. I don't have to work out where it's going to go. All I've got to do is decide what to do in 15 minutes. Close the trade is the most likely scenario. And there's a very few things that I might go, hey, I'll hold this because it's got some longevity to it. But that just eases everything. I don't have to constantly think about, should I close it? Oh, is that a reversal bar? Oh, it's coming back. Oh, it's going to hit the target. You know, it's gone. It's like, right, 15 minutes, come back in 15 minutes. I can happily sit there now and watch it for 15 minutes, or I can go and have a coffee, come back, whatever you want to do, however you want to manage it. But the point is, it relieves the pressure. Yes, I might still have the internal dialogue that's saying, yeah, well, Mark, you look at it, it's absolutely ripped, and you look at that juicy, lovely profit you've got on the table there, and it's 12 minutes in, you've got 3 minutes, I could reverse a lot of that. Oh, you should take it. Of course, you're going to have sometimes that pops up in your mind under specific conditions, but that's far easier dealing with that. There is that plus all the other anxiety of, well, should I come out? Should I come out now? Should I do this? Should I do that? You've already set your stall, so to speak. Put your flag in the ground. I'm holding this for 15 minutes. Same with swing trades. 2-day hold. That's it. Simple as that. When you have that structured trade and you have a specific hold time, all of a sudden, you know, it becomes a lot easier to deal with things, and there's less anxiety in the middle of the trade. All right, third thing is using computers. Computers, sound like a real old man there. Computers, using computers, children. Using computers to filter screen conditions. You get the idea. Using code, algos, some kind of screen, some kind of automated process. A computer, a Macintosh, enough of that. Computers to filter or screen conditions. So what you're doing here is you're basically saying, okay, let me have an indicator or a tool or something that says I don't trade in this environment, and it just maybe prints a rectangle on your screen and says, hey, this is no man's land now. Because of the price level or the time level. I don't trade at midday, or I don't trade in the middle of the price range, or whatever it may be. Okay, so you can add those as filters if you're trading stocks or swing trading stuff. The filtering criteria will bring the right vehicles or market instruments in front of you to trade. So you can do that. You can say, okay, I'm going to use algos, I'm going to use indicators, I'm going to use tools to bring my universe of trades in so that I don't get involved in that stuff, to take some of the anxiety away, rather than going, oh my gosh, you know, that looks like it's about to rally. It's like, well, no, because it's in the middle of lunchtime and it's in the middle of no man's land. I don't care if it rallies 150 points off this in 10 seconds. I'm not bothered, because I don't get involved in that position. So it relieves a bit of anxiety. So using computers to filter screen conditions. Number 4, leverage on OCOs or pending orders. Handy on this, talked about this many times before, still think it's underused by many traders. You know, I often force myself to say, right, bid there, don't go in at market, put your bid in, put your level in, put this, do that, do that. You know, play the game that you know is better to be played, rather than waiting for it to come and then trading into the situation. So pending orders, obviously using limit orders, stop entry orders, just getting you into a trade automatically. OCOs, one cancels the other. That relieves anxiety, because especially with an OCO, one cancels the other order, which is pretty much all platforms accommodate this, guys, or support this, should I say. You're in a trade, you've got a limit, you've got a stop, and basically when one of those is tagged, the other cancels the other one. So one cancels the other. So if it goes to hit your target, the stop cancels. So you don't have to worry about, oh, if I go out, or if I leave the screen and my stop gets triggered, will my limit still be live and I could be this and that and double in? No. You know, it's a bracket around the trade. One will get triggered, it'll cancel the other. That can reduce a bit of trade anxiety, because you haven't got to manage the trade. You've got your limit in, you've got your stop in, fine, you deal with it. Number 5, reducing position size. I had to put this in there. You know, if you really are anxious in a trade, you've got to consider dialing back the risk. You know, if you've got it such a position size that you're so concerned about every single tick and swing and move, then you know, you need to back it off a bit. There's a game to play. There's there who are kind of looking to scale up now. They've got to the consistent stage, and now they're like, right, I want to amplify this now. I want to scale up the business, and then make too much of a jump, and it's like, oh gosh, my trading's, you know, I'm all over the place. And it's kind of this game of bringing it back a bit, stretching it, bringing it back a bit, stretching it until you're comfortable, bringing it back. Oh, I'm uncomfortable, back a bit with the position size. So dial it down and then dial it up slowly until you're uncomfortable, and dial it back one notch. and then you sit there for a bit, and then you're trying to stretch and stretch and stretch. So just reduce your position size, because that will reduce your trade anxiety. So those habits are good. Taking obvious structured trades, having a specific hold time, using computers to filter the screen conditions, leaving on those OCO orders or the pending orders, limits and stop entries, and reducing your position size can dial down the stress levels. Take care, guys. See you in the next one. Bye for now.